Wake up money time, and already this year more than 13 banks have failed. Most recently, Washington Mutual. Understandably, this has many depositors on edge. So how can you protect your money? Well, certified public accountant Bob Martin is here to help answer that question. Good morning.
Good morning.
All right, help me wrap my head around this. 13 banks failing. What's happening?
Well, it's a very frightening situation. However, we have one of the safest banking systems in the world. And if you have less than the amount of the Federal Deposit Insurance Corporation limits, you're probably safe.
And that limit would be $100,000.
And they're increasing it to $250,000.
That's if that rescue bill gets passed, right?
That's correct. And also, even right now, retirement accounts are protected up to $250,000.
Okay, so 100. Let's say right now it's at 100,000. What does that mean? That protects you 100,000, but if you have anything more than that, not protected?
Well, generally that could happen. It depends on what happens to the bank. If another bank takes over, generally there's no interruption in service, and you'll get the full amount even if you're over the limits. However, if a bank's in big trouble and they have to liquidate it, then you might only get your amount up to the Federal Deposit Insurance Corporation limit.
As you can imagine, Bob, a lot of people nervous about this, just the fact that one bank after another going down. How do you know if your bank might be in trouble?
Well, fortunately, the FDIC, the Credit Union Association, and also there are a number of bank rating services that are available to the public. But again, the general public, almost everyone is under those limits, and so you're safe. Even if you're in a very bad bank, you will get your money back.
All right, what about if your bank fails and you've got more than $100,000, or even if you have like less than that? How do you know if your deposits are still going to get interest?
What'll happen is if the bank is taken over, it's up to the new buyer whether to continue the same interest rates. If the bank is being liquidated, then usually the interest will stop. However, if a bank is being liquidated, in other words, there was no buyer, you will get your money within 48 hours, so you will be able to go put it someplace else.
All right, and how do you know for sure that the FDIC has that money to insure the $100,000?
Well, right now, the FDIC has $45 billion in reserves. They also have contingency plans where they can draw upon the Treasury, and I understand also in the rescue bill there are provisions where they can draw, I think, an unlimited amount through the end of the year if necessary.
I'm sure that's good news for a lot of people. All right, Bob Martin.